How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 6 to the Asian Session Library. As you can see, Monday night, we had a successful Asian Session model. It was a sell setup, so we went from one side of liquidity to the other, went from buy side to sell side. And I showed this all in the chat and in the channel, live setups, 1-minute screenshots as price was trading live. I'll walk you guys through how I was able to find this sell setup. Let's walk through it together in today's video. So first things first, what I'm doing is I'm looking at these two sessions here. And it's mainly this session that preps this session setup here, the New York lunch session. The New York lunch session is basically where consolidation is most likely going to form. Ideally, there's sentiment being built up. Nobody should be trading here. If you're trading in this time period, I personally think that you're chasing price. The late PM session for the currencies, you shouldn't be trading. You're normally going to be faced with consolidation. If you're going to be faced with consolidation, I would avoid it and trade another session. That's exactly what I do. I avoid this session and I trade the next session, which is the livest session, Asian Session Open. Trading is permitted 8 to 12 a.m. New York Eastern Standard Time. But just prior to Asian, I'm marking off all my buy side and sell side liquidity. Now for this one, there was another bonus. I've added in this high here. This was Sunday's high. So this theoretically was the previous daily high. I knew that the market makers on a higher time frame on the daily chart was most likely going to do a high probability raid on the buy stops above this high here. But as the model follows, I'm simply just looking for the buy side and sell side liquidity on the 15-minute time frame that we have here. So that's going to be this high here. There's one here. It's relatively equal, so I'm not going to mark it off because these are really close, but that is a swing high formation. There's another one here. There's one here. This one is broken by this candle here, but this candle does not break this candle's high here. Then with the swing lows we have here. That's sell side liquidity now. And then we have this down here. Now at the same time, I was simultaneously looking at the dollar index and breaking that down live too in the chat, as you guys saw. If you're not in the chat, just let me know. I'll get you included. But we can see here, I have all the levels that I have potentially for a opportunity. If I was speculating that price is going to go down and break some type of low or sell side liquidity, then I would be looking for some type of buy scenario. If I was expecting price to go higher and it breaks a high or previous daily high, then I'll have an ideal sell scenario. Now the commercials most likely, and I say this time and time again, if you're a market maker or you're the commercial speculator or the one that controls price, what would you rather do? Would you wait for price to break a high then sell, or would you sell before breaking the high? You would wait for price to break a high then sell. That's the most ideal sell setup. Same thing vice versa when buying. Are you going to wait for price to break the low then buy, or are you going to buy before the low is broken? You're going to wait for the low to be broken, then you're going to buy. That's your ideal buy and sell scenario. Here, we're just going to mark off the obvious areas with the dollar sign. So you have this, we'll keep it close here. With this one here, this one down here, and then we got that one all the way down there. Now, when I play price forward, we're going to watch and break this down step by step. So price is live, and as you can see, instantly price runs up quickly. So we got that high probability raid on the previous daily high here. That's what price ran up and hit right here. The fact that it did that suspects that market makers are going to sell now at this point. We broke a previous daily high and we took out fractal swing highs as well. We're above the Asian open, which is very crucial. These small little details that really matter in Forex. The fact that we're above the Asian open puts us in a premium territory. So just put it as 8 p.m. open. And this represents the opening price for Asian. I'll put another one here because I know on the lower time frame, we're going to want to see it closer in price action. 8 p.m. open. Anything above this price point, premium, high probability sell scenario. Anything below it is a high probability buy scenario and a discount. So the fact that price opened and went straight up for this high, I knew something on the lower time frame would get me in short. So we can see we run those highs quickly. That's the 8 p.m. opening price there. Now I'm waiting for a fingerprint, and that's simply going to be the fair value gap. That's my favorite thing to identify. There we go. Fair value gap. That's the very first fair value gap that formed after taking out highs. Because if you notice, it took out this high, no fair value gap. It took out this high, no fair value gap. Then it finally took out that previous daily high. Then we got that fingerprint right there. They're showing their hand there. That's the fair value gap. And how I would set this up is I would wait for price to trade into it and go short on the discounted side of the fair value gap. So it would look like this, short there. Then I would go with a 20, and I went with a 20 pip SL. Generally, my stop loss is anywhere from 15 to 20 pips. That's all my intraday setups are normally looking like. So we got the 20 pip SL here. Then we're going to go for a 1-to-1 if we wanted to, a 20 pip TP. But I went with a 30, I think it was like 32, somewhere along the lines below this swing low here where sell side liquidity is. So this is an ideal setup. Looking at the range and where price could be projected to, it was definitely ideal. Plus, you'll notice that these fair value gaps or the PD arrays are forming above 8 p.m. opening price. It's not by random choice that it's printing the fair value gap above the 8 p.m. opening price. It's doing that on purpose. I know it is. Same thing vice versa. If it was a buy setup, it would form the fair value gap below the opening price for the buy setup if it took out a low. Here it's taking out highs, printing the fair value gap above in a premium territory for the Asian session. Now I would suspect price to go lower once we tap right into it. So if we zoom in, we have another fair value gap there. I won't mark that one off, but it's very obvious. See how we tap into it? I would suspect price to break, and I'll speed this up for the video's sake. Now at this point, if I'm suspecting price to go lower, that means I'm suspecting yen to go higher and the dollar index to go lower. At the same time, I was showing you those live screenshots of what I was suspecting dollar to do. If you're in the chat in the channel, you saw that. I was expecting price to either go back to that gap, the fair value gap, or those swing lows. And we did see that. Here we can see price action is breaking down. And how do I know price action is breaking down? Well, it's because it's making lower swing high formations. This here is the highest swing high that we have during the Asian session here. We'll put this top left and we'll make this red. The setup forms almost every day. What's that? That's a lower swing high. So we'll just type that out. Lower swing high. So we can see that price is failing to make a higher high. Why is that? You can see price just broke a swing low as well. Right there in blue. Mark it out. If price breaks a swing low, in my mind, I'm thinking bearish momentum shift, right? It may not be a market shift because there's no speed or fair value gap running through that swing low, but it's still an ideal shift because if price prints a lower swing high after taking out that low, I know that the market makers or the algorithm wants this price action to go lower. We also get another lower swing high formation. We also get a fair value gap here, a fair value gap here, and notice this fair value gap runs through a swing low. See that? Notice this fair value gap as well runs through another swing low. So there's speed coming into the marketplace, and this is a little crowded. I don't like it like that. But you can see swing low ran with speed. There's another speed here with the fair value gap. Runs this swing low. There's a market shift occurring. Lower swing high forms inside the PD arrays. It's not random. The market is printing these PD arrays, all these fair value gaps, above 8 p.m. opening price for a reason. Because that's where they're going to sell. They're gearing themselves to push price lower. That's what's going on here. So if you play price forward, you'll see how price is slowly breaking down. Now here at this point, I said don't panic because many people saw that price return back to my entry. And I texted the chat, hey, don't panic. This might just be a run on buy stops. Because I'm still suspecting lower price action to unfold. If price is going to go lower and it's running highs, it's just a buy stop raid on buy side liquidity. I also showed the analogy of OTE. So if you cut this swing high and this swing low, this range that we're working in, cut that range in half, you can see that 62% retracement level to 79% retracement level. So that hole here, 62, 70.5, 79, optional trade entry. An Asian session optional trade entry right there. Price is going to probably most likely break down and go lower. Pre-price forward. You can see how we get right back into a discount. So price was at one point in time above 8 p.m. opening price, a premium. That's where the sell scenarios are unfolding. Premium territory. That's how I'm multi-layering all my setups. I'm not just getting in and saying, yo, Deontay's just going to sell here randomly. Deontay's just going to buy here randomly. No, it's methodical. There's a thought process behind it. And all the other little details as well for me to find the entry or find a pyramid or find a re-entry, because you'll see that in some of the screenshots, I have found another sell opportunity. You can see here, there's another fair value gap here. Very obvious one. It's very large. Look at how price prints a lower swing high in it. See how price is breaking swing lows, but there's lower swing highs forming. If you're in a bearish market, the only two things that occurs is lower swing highs and lower swing lows. If you're in a bullish market, write this down. If you're in a bullish market, the only thing that you're most likely going to see is higher swing highs and higher swing lows. Nobody can tell you different, because if you look at this market and you break down what a swing high and swing low is, and you look at it in a bullish market, you see that they all go higher together. If you look at the market in a bearish formation, you'll see that they're all going lower together. Lower swing low, lower swing high. That's what you're witnessing here. Yes, there are moments in time where it runs a swing high. But if it's ideally going to go short, you're just going to think of that as a false break. It's not that I'm sitting here predicting when the false break is going to occur. I'm just categorizing that run on the buy side as just a buy stop raid. They're taking out the stops. Anybody that was selling and has a trailing stop above these swing highs, they're just stopping them out so that they're not able to eat on the way down. They kick you off the train, and then the train goes in the direction it wants to. And we all have been there before, because we all have been taught to put our stop loss above a high. And that's what the algorithm is doing, which is why I kind of think when people have a 2-pip SL, 3-pip SL, it's kind of hilarious, because you'll see that it quickly runs those highs. Look how quick price runs up, takes out these highs. A 2-pip SL will get eaten and destroyed like it's no problem, which is why I go with a decent size stop loss, 20 pips. Plus proper risk management. I'm not sitting here risking 5% on the trade. Now, if you're risking 1% here in your total grand scheme, you can risk 2%. You can find re-entries. You could put another half position here and another half position here. No matter where you're finding it. And then it grand total adds up to 2%. Or if it's even less, you put a 0.5% here, and you put another 0.5% here. You got a total of 1% that you're risking here. There's many ways you can do it. You just have to think critically for yourself. And you can see our price runs all the way back down below 8 p.m. opening price. But notice how this opening price here is very sensitive. It's fair value. Look how it quickly dips into it and then runs away. Now watch what price does here. See that quick sell-off? What is happening once again? Another market shift. Where is this fair value gap forming, guys? Physically on fair value. So it's a serious fair value gap. It's not something that I would take lightly. It is still something important. Just because the fair value gap here physically isn't above the 8 p.m. opening price, it's landing on the 8 p.m. opening price. 8 p.m. opening price is still a sensitive price point. It's fair value. You're not paying a premium, you're not paying a discount. It's just fair value. Price, you'll see, trades right back into it. We'll speed it up. And gives another sell opportunity. And what is it most likely going to target? It's probably going to target the low that it formed. Right there. This low here would be the target. So that's another sell opportunity that you could find. And where's the sell opportunity occurring for this setup here? Let's say you didn't get the higher sell setup and you were coming late to the session. All you're looking for is a fair value gap that's above 8 p.m. opening price. You look for it to go short. If you haven't taken out the 15-minute fractal swing low during the New York lunch session, you still have an opportunity to get a short. And that doesn't mean because price takes out that 15-minute swing low, it's over. Because we do have another one. We have one all the way down here. Now, does that mean price is going to reach that one? No. But you can think of it as a draw on price. And if you play it out, you'll see price does what? Breaks all the way down back to that swing low. There. And while this is occurring, I was watching DXY at the same time. I wanted DXY to get weaker while yen got stronger. Now, many people will look at this and say, oh, does this work on other yen pairs? It does. Now, does this work on the majors and the minors like AJ, GU, UCAD, USWISSY? It does. But I prefer to use it on the yen crosses instead of dollar crosses. And if you were to look at all the yen pairs, this is AJ here on the top right on the 15-minute time frame. This is 8 p.m. here, 20. And this is midnight right here. Let me move it over. Midnight. Look at how the same thing is occurring. Sell setup. So you can see all the yen pairs normally move correlated together. Not inversely correlated, but correlated. Takes out this high, and then it sells lower. Look at the bottom right. You can see on the 15-minute time frame. Takes out some type of high, goes lower. Look at the bottom left, pound yen. Same thing. Takes out some type of high and then goes lower. So it doesn't matter which pair I was looking at. Sometimes, I just want to throw this in there because it might be a question that somebody may have. Sometimes you won't get that setup for one pair that you're looking at. So let's say I was looking at UJ and the sell setup didn't form and it hit my stop loss. However, AJ or GJ or EJ could have had that perfect sell setup and the stop loss would have been hit. But it all depends on which currency you pick. Sometimes you pick the currency that is just not suitable that day for the setup. And you just got to live with that. Because there are times I've traded the Asian session model with AJ and stop loss was hit. But then EJ and GJ and UJ all went to TP. But I happened for that one night to pick AJ for the model and it didn't work out. As of right now, I've been tracking UJ for May, so I'm just keeping it simple. I don't want to be showing 20 different pairs on the channel. I think that's very confusing for people to digest. One pair a month, let's stick with it. It doesn't matter because all the price actions should be the same. If they're all coded the same, they all should be the same. Doesn't matter what pair I'm looking at or what asset class I'm looking at. That's why I've been looking at UJ mainly for the Asian session library thus far, since we're in the month of May. And you can see, it just breaks down all the way down. Premium, discount. Remember, the little things are important. It's forming those fair value gaps above 8 p.m. opening price specifically for a reason. Because that's where they're going to pull price back into it, then go short. That's what they've been doing the whole way down. New fair value gap, trade price back into it, go short. You see it happens here, happens here, happens here. And there's many other smaller fair value gaps. I'm not going to go through all of them, but you'll see that. And this is just a 1 minute time frame, guys. You could have a completely different mix about it. You could be looking at it from the 2 minute perspective, 3 minute, 5 minute, the 4 minute, or even the seconds if you're that, advanced. But all in all these models that I've showed, this is episode 6, guys. Episode 6. I don't know what episode I'm going to be on. I'll be old and gray. Episode 5,000. Same thing is still formulating. So hopefully this was insightful. Peace.